Hi,
Hello,
Nicholas.
mate.
How are you?
I'm finding you.
I'm fine. It's so nice to meet you. I believe this is the first time we've had a chance to do this, correct?
Oh, actually, we've done that 4 years before.
Four years?
Yeah, 3 or 4 years. I was a chief analyst at FXCM at that moment, and
Oh,
um,
okay. Because Lara's only been around a little over two and a half, so maybe
I
maybe
think
when
it was really at the beginning.
okay, so when FXCM was sponsoring Lara, I had the ability to talk to you. You look like a rock star, so
This is my new picture because I
oh,
changed. I changed now. I'm working for CMC. It's a CFD broker in England. I don't know if you know them.
okay. And where do you trade from?
I'm from
What's your
France.
location?
I'm
Where?
from France, in Paris.
Okay. Bonjour, Nicholas.
Well,
That's about it. Je
you
suis
guess.
fromage. I am cheese. So, great to meet you. Can you tell us a little bit about the beginning of your journey? You still look like a young guy, but compared to me, most people do. How did it start for you? Did you have mentors? Tell us a little bit about the beginnings and the early part of your journey in the industry.
I've got a little question. Do you want me to share my screen, Dale?
Yeah, sure. Go ahead. So you go to the upper left-hand corner, and you'll see a box, green box. Beautiful.
Do you see everything?
Yes,
Do
I
you see
do.
my S&P?
Right now, I see the microphone.
If I do that,
Yeah,
do you see my chart with the S&P, everything?
I don't.
Okay,
I
so
still see you
let me share.
talking right now, and a picture of you. So once you click the screen share, it'll come up and show different screens that you click on. Beautiful. Here we are. Oh no, I think that's my chart.
Just give me one sec. Yeah, I got it.
There
Now
you
it
go.
must be okay.
There you go.
Okay, great.
All right. So we're looking at some rising wedges. If you can just move that, beautiful. We are here.
Yeah, we
Oh,
are.
okay. So are we breaking the wedge line today?
I think we've done that end of August
Okay.
for a large number of macroeconomic reasons. So um, maybe if you want to talk about macro, do you want to start with me?
Yes, I'm comfortable going wherever you want to go, Nicholas. So,
Okay.
Mauricio sent me some notes that there were certain areas that you wanted to talk about today. So I'm ready to go. I cover all different kinds of instruments. So I'm happy to go to whatever you want to talk about. And it looked
Okay.
like you wanted to start
Well,
with stock indexes, so that's fine.
first, I will tell you a little about me, like that the people that are listening, you're
Okay,
based.
is that your LinkedIn page?
Yeah.
Okay, go ahead. I don't think we've connected on LinkedIn yet, but go ahead.
Not yet.
Tell us about your journey.
Um, to know a little bit about me, I'm Nicolas Cheron. I am actually a French strategist for CMC market, CFD specialist in England. I'm based in Paris. I've worked in finance and especially in doing charting analysis for the last 6, 7 years. I've started working for a broker in France, creating a blog section for people that wanted to share ideas and charts. Then I've been working for Zone Bourse. They are writing daily analysis on forex, indexes, raw material. I was lucky as a student in 2008 to work with a hedge fund manager. So it was really a crazy year, as you may know.
Well,
Uh,
isn't it? It was good preparation for what you're seeing now, isn't it?
I think so. Yes,
Okay.
it was really good to leave a beer market to know what are the reason why we are going in a beer market, and also to be able to know where we go from a bullish to a bearish market when the VIX is going up, when we are breaking wedges, and we are going to speak about that. That's actually the case. And after that, I've been writing analysis mainly on Forex for FXAM, the American broker, and I've done that for 5 years. And now I'm working for CMC Market as a strategist. I'm writing on Forex, but also on indexes, stocks, and raw material. So like you, I
Okay.
think I'm leaving the market for many years. Not like you, because for you it's a longer time, but
Don't rub it in.
my life is with the markets.
You live in, do you dream, when you dream, do you see charts in your dream?
Sometimes, yes.
Okay, then I know you're then I know you're a lifer. Okay, so why don't we get to these breakdowns that happened in August, and we had that flash crash into August 22nd, and if you show your wedges where we are now, are you looking for a repeat of the financial crisis of 2008? Because wedges, in my view, and it isn't necessarily the case, but wedges normally retrace 100% of the move. Do you
Yes.
think that could happen here?
I think technically that can happen, as this is the definition of the wage, and as historically we have done wages and we have sometimes retraced 100%.
Because we
So
did that in '07. It took out the low of the wedge. That didn't happen in 2000 when we broke down the dot-com
yeah,
break
I
did
think
not.
that usually on a wage, I think that 50% is a nice objective. Because when
Okay.
you retrace 50%, then you can have longer consolidation, corrections. So to retrace 50%
So
and
would
to
that be
come
what, 1100, 1100, 1400? I'm just doing the math in my head. If we retrace this move from 666 to from the highs at 2130, 50% would come in where? 1400, 1100. I think about 1100, wouldn't it?
yeah, 1100 is a big zone, I think. 11,
Okay.
1200.
Okay.
We would be back to normal after having markets that are actually in the sky.
Yes.
And yes, to answer your question, I think that we have nice every 7 year we have cycles, and we have bear market or crash or
The
shocks.
the Shemitah every 7 years.
Yeah,
Are you
correct.
familiar with that? The Shemitah, it's not French. I think it's a Hebrew word. A lot of people were talking about that. And gosh, I mean, even going back to biblical times, Joseph, 7 years of plenty, 7 years of naught.
Hmm.
So interesting that you see that cycle playing out. And I like the way um, you have it labeled as emerging countries being the cause for this. Other people are saying it's sovereign debt, guys like Martin Armstrong. So we never
Showing
know.
this kind of chart.
Yeah, there you go. So you're showing the growth of debt. So instead of deleveraging after the financial crisis in 2007, we've actually added more debt and more leverage to the system.
Yeah, it can be the emerging countries, it can be the debt, it can be also. I think everybody is putting a lot of confidence in the central bank work and planning. And if people begin to lose faith in central banks, it could be a good reason for market to really go lower. Because if you compare the Fed balance sheet with the S&P, everybody must know now and see that chart that a big part of the upside movement we had on the S&P 500 is clearly was created by the quantitative easing.
Centrally planned markets.
Yeah, yeah. And this is, in fact, I wanted to speak to you with you about macro, and this is my conclusion when we are speaking about the wages, when we are speaking about all the bad reason we could have, Russia, Brazil, China, etc. The only reason that can explain the market is still so strong is central bank work. You can see this chart here with balance sheet of the Fed, of the ECB, of the BOG, of the China, and
Yes.
so I don't know if they can change the history, and if they can,
Save these markets.
yeah, really.
Okay, so the Fed put is an issue, and basically confidence is beginning to be shaken initially in China by their central bank with the crash in China, and then arresting people for shorting the market or liquidating the market. Um, what is your view? I've been talking about this for a couple of years. That the Federal Reserve has been around 102 years. 1913, I believe, was when the Fed came into existence. So they've been at it a long time, and they've had missteps, and we may be looking at another one here. Whereas central banking in China is relatively, they're rookies on the street compared to the Fed. So the less, it's kind of like trading. The less experience you have, the more prone you are to making missteps. And what's your view on how the central bank in China is handling things? And do you think they're going to become even more desperate and launch another QE program? And back to the Fed, instead of thinking about when and if the Fed will tighten, do you think QE4 is possible here in the U.S.? We know QE is continuing in Europe.
Yeah. Um, about China, I think that you have seen the charts with the Chinese Shanghai Composite compared to the S&P 500 in 1929. When market crashed in 1929, there was a meeting with JP Morgan and banks, and they started to buy stocks, and they
Right.
wanted to help the market stay in a bullish environment. And so I totally agree with you with the fact that the POBC is a very new central bank, and apparently they are doing the same mistakes as the Fed was doing in 1929. They went directly on the market. They try to fight with the market. And we know that big investors, we know that hedge funds like to fight with central banks, like we have seen on the CHF, for example. So I think the China central bank is very young, is doing mistakes, and we could have troubles if, for example, the China composite was going down. Is actually in a range for 1 month. So if we break that down and the volatility goes up, then we could have more trouble there. To go back on Fed. Um, yeah, QE4 is for 6 months. It's my personal opinion. To me, the Fed is they can't tighten. They can't hike rates. They should have done it before. Uh, will they force themselves to do it? I don't know. But to me, if they do, market will go lower and they will have to go back to QE4. So my strategy for 2016 is to wait for QE4. Yes.
Your strategy, and waiting. So you think it's a year off? Well, no, not a year off. It could happen any time in 2016.
Yeah,
So then I guess we should get back to our bailiwick. The dollar is under pressure now. Do you think this is a significant high in the dollar, significant low in the euro? Can the parity bears in euro forget it for a while?
completely. Since just to do a parallel from the DAX to the Eurodollar, to show you another chart. You know, investor cycles. So I think that at the beginning of the year, when we had the QE in Europe with the DAX, we have seen the euphoria. I think we have seen anxiety during the summer with the China shock. And I think that now we are 20% from the high. We are maybe in the denial and we could go into the fear. So I think this is maybe the beginning. So as I was thinking DAX wouldn't go higher at the beginning of the year, my plan for Eurodollar was that it won't go to parity. My plan is that even if the, um, the ECB is going to do more quantitative easing, if the US don't raise rates a lot, or they don't do it, and if they go to QE4, then we would have Eurodollar back to normal to 130, 125, 130, and yeah, all the banks that were looking for parity, they will change their mind, and some of them have already changed their mind. You can see this bullish channel here.
Yes.
So I think this is a proper, nice and easy way to show the Eurodollar for the last couple of months, 6 months.
Yes.
If we
So
have,
this is a channel after the big break from 140 to 104.
yeah, yeah, yeah.
Okay.
I went from the lowest 1.05 in March, and maybe we are trying to do a double bottom on 111. I think like Ed Matt, because I've seen an interview of you with him, and I like him very much. I think we could
You
go
come
back.
to LAR to watch our interviews?
Yes, sometime. I like
Okay.
to watch English videos actually because we don't have so many French technical and charts lovers. So I'm
That's because the Raiders, right? Lovers, not fighters. So, okay. So, and also, I'd like to your command of the English language as a second language is excellent.
Thank you very
So,
much.
a lot of people feel self-conscious when it's their second language, and I always say to them, Nicholas, that ask an American to speak a second language, and most of them will not have command of another language. So you're doing very well. I think Ed Matz was talking about one more break in the euro after the Fed to take us down to 102. You don't see that happening.
If we break 110 and the channel, then okay, we could go lower because it could be a flag. And
Okay.
we had a very big bearish movement. We are now maybe in a consolidation. So below 110,
Yeah.
okay, that could be a fly. We could go back to 102. But if we do that, knowing that ECB would launch a QE2, but before knowing that Fed would launch a QE4, it could be a big low point on the euro dollar before going up.
Okay. Yeah.
And if
Because
I,
a lot of people are saying, for years because of what central banks were doing, Nicholas, the big fear was inflation, hyperinflation, while the wave that's damaging us right now is a deflationary wave led by lack of demand, oversupply of everything, weak commodity prices that may now be shifting. So people were saying the initial stages of a bear market in stocks and everything else was going to be because of deflation. So they break everyone. Everyone gets out of their commodity positions, and then we move from deflation to severe inflation. Is that the way you're going to see it? Because both can happen, and I'm not
Yeah.
quite sure. I don't believe we're out of the deflationary period yet.
We will see, but yes, nobody was thinking that commodities would go so low. So we are in a new scenario, in a new paradigm, um, and yeah, I don't know how central bank we will manage to fight that, but I don't think that QE is a good solution. To show you a chart speaking about that, you can see
Okay.
the
The history of
AOG.
Japan from 1989. Huh?
Yeah,
Yeah.
the Japanese are doing QE to have inflation rise, and it did for some months, and now it just get crushed. So I don't think that QE is the solution to get more inflation. That's just mathematic. We can see that on charts. So I don't know why central banks continue to do so.
Okay.
That's
That's
dangerous.
a desperation.
Yeah, maybe. And the chart you can see here is um, is a chart showing the 10-year yield and the Eurodollar correlation. This chart means that even if the Fed rise rates, you can see that usually then the 10-year yields will go higher and the Eurodollar will do so. So hiking rates doesn't mean Eurodollar at parity. You see what I mean?
Yes, because actually hiking rates could even weaken the economy more, therefore weakening the U.S. dollar.
Yeah.
Okay.
This
Yeah. Good
is
point.
another good chart about it. It's from Ashraf Lady,
Okay.
and so everyone is saying if we see a rate hike, then the USD will go higher. But that's not true. Last time in 1994, they hike rate and the USD go lower. Same in 2000, and in 2004-6 it was nearly unchanged. So to me, the Eurodollar have a lot of reason if they hike or not to go back to 120, maybe longer term 130.
Okay. I've seen some people that are very bearish a dollar that are talking 150, 160 euro. Could you see that possibly happening? That would be kind of an outright dollar crash.
Mm, I think we have a nice bearish channel for 6 years maybe on euro dollar,
Yes.
and I don't remember where is the top of this channel. Um, just showing you what I have on S&P 500,
Yeah.
just to you've done an interview with someone who was speaking about a broadening top, so we could go again to do a new high before going down. And I love this scenario because Head and Shoulders are very rare, and everybody see them, everybody plays them, and 80% of the time that they got crushed.
At
Uh,
80% of the time, the head gets decapitated. Again, French, the guillotine. So, yeah, so that's interesting that you see that. Do you think that can happen before we clean out that 1830 low? Maybe we go to the trend line and then that possibly happens. That perhaps we go to your green trend line and then we get the rally to new highs, or do
yeah,
you think
That
is,
that
is
uh, that's a possibility that we have to keep in mind because we didn't break the trend line, so we are
right?
not in a bearish movement. We are not yet in a bearish market, and I think that bearish people a lot of people, a lot of bearish traders died in this 6-year uptrend. So if central banks are doing more easing, we can go back to new high before doing a bear market. So I
Okay.
would be very prudent, and to be sure that on a long run we are in a bearish market, I would wait for 18 level, 18,000
Trend line
to
break.
1800 to break. Yeah.
1800 breakdown 1750 would be an area people are talking about, and then we could get new highs. Do you think that, so you're open to this. What do you think would be the catalyst for us to get new highs? Do you think that would be QE?
Yeah.
Okay.
I think that Mario Draghi spoke yesterday about some more QE in Europe. He said that's not necessary, for instance, but they are ready to do so. End of August, when we had the bearish movement on China, the yen rise, and the BOJ said that they could do more QE, and China is also open to more QE. So I don't know if they all do, if they will do a call and say the same day that they are all doing QE, but that's a possibility. That
Okay.
some central bank add some more QE, and that we go to the high again before breaking the the 1800 mark. Again, I think that people sometimes forget that they are not only bullish and bearish market. You can also have neutral period, and on some asset they are very long. So we can stay like this in a neutral period for maybe a year or more, maybe two, and after that we'll see if we enter the bearish market or not.
Okay. Well, I know you want to get to some currency charts,
Yeah,
and what you described. If the whole world's doing QE, that's also kind of a rationale for gold, which has come to life after breaking down under 1140, and it's come to life. Here we have the euro, so you just go ahead
uh,
and go
to
to wherever you want to go. Oh, there's that channel.
to answer your question, the 130 is here, so it's the top of the channel. So I don't want to be too optimistic speaking about 150, but
But that comes in where, 130-ish?
Wolf, yeah, yeah.
Okay.
To speak about gold, I think on gold, there is something very, a moving average 100, very simple, will perfectly fit the market for the last 6 months. You would have every top near this moving average, and so this this moving average is near one. It's near the actual rate, 1,150. We also have here a resistance,
Mhm.
a nice pivot point. Um, to cut the bearish trend, we really need to do a new
Close
high.
over that 1160, 1170 range.
We
Yeah.
must we must break 1,170, and
Okay.
we need a new high to start something bullish, because you have seen rallies on gold these last couple
Yes.
of months and years. Every time it was going lower after. So here we are. Short term, if we break 1,170, we could go back to
1230.
12, 1200, 20, 30. And here is the big resistance, the major one, which is clearly the mark for the bearish market on gold. If we break that, it would be another story on gold.
Okay. So before your interview, just go ahead, but I know that you wanted to talk about EM currencies and
Mm, for
no?
USDN, fact is that
Okay.
I'm very balanced, because if you want to play central bank game, you buy USDN, you wait for the next round of QE, okay? The problem is that USDN is very correlated
Risk.
with risk. So if we got volatility, bearish trends, acceleration on indexes, then USDN would go lower, and it would go lower despite new QE, because I think that people are trusting less and less the BOG.
Okay,
I
that's a great
also
idea.
I also got USD against the Turkish lira, but you can speak about the South African, the rand. You can speak
Yeah.
about all emerging countries currencies. Um, I've written some argument there.
I'm telling you, you have great coverage on so many different instruments, Nicholas. I could tell you are passionate about what you do because your research is very in depth and you're bringing up charts. Both it's nice the way you tie in the fundamental research that you do along with the technical. That
Thank
kind
you
of
very
sets
much.
you apart. Some people are either real technical or real fundamental, and
Uh,
you have a
in
nice
fact,
balance.
as an analyst, I have to speak with media, and media don't like charts. They like to stories. They like you
Right.
to speak about China, to speak about Greece, all these nice daily stories.
Well,
Um,
isn't it nice to come to LAR where we let you talk about whatever you want to talk about?
I'm speaking macro with media, and I'm speaking technical analysis with traders,
Yeah.
clients, readers, because I know that that's what people like, but I like to write why something is going down or up, not just because it break a wage or
Right.
whatever.
Right.
Um, so to finish, I have a little scenario, but not sure. It's about emerging countries, to say that even if the US hike rates, maybe emerging countries' currencies wouldn't go really much lower, but could be at a turning point, and people could sell the news. You see what I mean?
Yeah, yeah. So if we do go ahead and hike in October or December, these emerging market currencies, peso being included, you have what? You have
Yeah, we have
15 or
three
20 that you
reasons
can
for
choose
that.
from. Uh,
All these currencies have lost 20 to 30% against the USD. So maybe the news is priced in.
yeah,
Also, if the USA are raising rates, it means that their economy normalize. They are stabilizing. They are in the economy is still strong. If the US are strong, even if China is going little is stabilizing, um, it means that emerging countries could restore maybe their economy on the short term. And
okay, and could that be the case in both the Aussie and Kiwi and Canada, the commodity currencies?
mm, I'm really balanced on this scenario because it's a possibility, but I also see a possibility of all emerging countries' currencies and some currencies like AUD, Australian dollar, going really much lower, because the Australian dollar is going lower, is in a bearish market for years now,
Yeah,
for maybe 2 years, I think, 2, 3
yeah.
years.
It even broke
And we
back to I
are
believe
and
2000
we
and
are not yet in a
2006.
bearish market.
Yeah.
So what would it be if we enter a bearish market now, and if everybody is selling the the China partners? Also, AUD is what's the name? AUD and ZD. But they are related to China, so it's dangerous. They are related to gold and all
The
metal.
Kiwi, the Aussie and the Kiwi, you mean, the New Zealand?
Yeah, they are already
Yeah.
related to raw material. So it's
So,
they are at risk. So
Okay.
speaking about bottom here on AUD, just telling you that we got this
Yeah.
kind of, yeah, it's broken.
Yeah, broke. Yeah.
Yeah.
And that's a monthly candle, so we only have 8 days for it to try and get back in the channel.
Yeah, but you
So,
mean that would you really mean the S&P to go to new highs if you want AUD USD to go much higher?
okay.
It's quite impossible.
Great correlation analysis, too. Really like your work, Nicholas. What's the best way for people to follow your work, get involved with you? I know you showed your LinkedIn, and you
I'm on
could go.
Twitter,
Okay.
so you got here NCEERON
Okay.
underscore CMC. I will zoom a little.
Okay. That's the best way for people to follow you. And as a client of CMC, you probably provide a lot of analysis for people that have accounts with them, right?
Yeah, yeah, we are doing seminars, webinars, writing newsletters, trying to give them um, all information and education that retail traders need to enter the market. Because as you do, I think that to speak a lot about psychology, to speak a lot about education, to speak a lot about money management is also very important. We have spoken about technical analysis and macro. It's important too, but depending on how you are trading and if you are a short-term trader, for example, then psychology and money management will be much important for you.
Nicholas, to me, our most valuable currency is time. Money comes and goes. Time is gone forever. You'll realize that when you have a little bit more gray hair. But I want to thank you so much for spending your most precious currency with us for about 45 minutes or so and breaking out your telescope. It's so nice to get some macro views because everyone's attached to their 1 hour and 15-minute chart and 4 hour chart,
Yeah.
and appreciate you covering the whole globe for us. So
Thank you
was
very much,
really
Dale.
it was really a pleasure. Thank you for edifying our community. Summer's over. We're into fall. So my hope for you is that pips rain down on you this fall trading season and for everyone you're associated with.
Thank you very much. See you, Dale.
All right. Thank you, Nicholas. Good
Thank you.
hunting, buddy.